The Turkish FIG market has developed pretty nicely over the last couple of years. If you were looking at how they were funding themselves 10 years ago, it was a lot reliant on I would say, more simple products like trade finance, syndicated loans. And slowly but surely, we also saw, the bank's balance sheet further evolve, tap into new products. We saw the emergence of securitizations, of those diversified payment rights. We saw the emergence of Eurobonds, to the great happiness of DCM bankers. And even within that category, we are about to see the emergence of a new era, which is hybrid capital, Basel III compliant, where VAKIF was the first to tap that space earlier this year, and we're clearly hopeful that we'll see that segment a lot more active. And then there's further things in the pipeline. Turkish banks are thinking about covered bonds following the implementation of the new law. They've also started diversifying away from dollars. We've seen the first couple of euro transactions. So I'd say that Turkish banks have more and more options when they think about their capital mix, and international banks are happily accompanying them in that respect. The first hybrid transaction, Basel III compliant, because we had some old-style instruments into this country, was issued by VAKIF Bank in January of this year. Attracted a lot of light. Was certainly not an easy transaction, and it made people realize that there's still a lot of education needed in emerging markets. But it nevertheless acts as a blueprint and a template for others to follow suit. Now, the market has gone through a very volatile period. We think that segment is still open to Turkish banks, and it's still a tool that they can use to optimize their capital mix. But with that being said, there's a need to continue educating the investor base. There's a need to continue developing that segment. We need to see more supply, more liquidity injected into the market, and hopefully, this Basel III segment will become a big part of the Turkish FIG debt capital markets. Of course, Basel III, since its implementation in the country in January 2014, obviously it's changed the way Turkish banks look at the world. But to your question, it hasn't really impacted the way they do business. Turkish banks have always held very conservative capital levels, with the minimum capital adequacy ratio of Turkey being at 12%. They've always maintained a pretty nice buffer versus international peers. And also, they use the standardized methods when computing their capital ratios, which is a pretty strict and punishing methodology. So all of that to say that it's not necessarily something that is impacting their day-to-day business. They're probably a lot more sensitive to what's happening on the political scene and the macroeconomy front. And when we interact with treasurers, we do get that feeling that they're a lot more focused on what's happening on the macro front and looking a lot more at the sort of GDP growth and by consequent their loan growth than they are worried about looking at really what Basel III means for them. The tipping point was obviously, or one of the tipping points was the election. Market-wise, the outcome was very friendly. Funnily enough, the market clearly over October had priced in a sort of coalition. And once the election results were out, with the AKP getting the majority, you see a further continuation of what had already been a pretty nice rally in October. So that proves that, I think people are slowly getting comfortable with the sort of political background. But obviously, it's not the end of the road. There's plenty of risk looming ahead of us. And so, to your question, I think people have very quickly switched their attention to the politics, to what the Fed is going to do, what the politicians are about to say, what kind of independency will be left to the central bank. So there's plenty of risk still, or challenges still lying ahead of us. So we've resolved part of the problem, but we need to see further improvement into the sort of macro scene before we can be more optimistic about the outlook for Turkey in the debt capital markets. We've been sponsoring GFC for a number of years, and not just in Turkey, but also in the Middle East, and we're thinking about broadening our contract there. But I'd say what it brings to us is visibility first. When we started implementing our strategy into Turkey, for example, for us this was, I would say, a nice tool to put the franchise out and show that we're active in the country. And then what we've also seen is over the years, this event has admittedly, and credits to GFC, they're very well developed. It's getting bigger every year. The number of treasurers, corporates, investor attendees is increasing every year. It's not just bankers. So I'd say the quality of the attendance is also a big reason as to why SocGen has continuously been sponsoring this event. It's an opportunity for us to network, catch up with clients. Of course, we can catch up with them whenever we want, but I would say it's a very efficient way for us to catch up with everybody over a very short period of time. And as a matter of fact, had a couple of meetings this morning, and we already have very concrete follow-ups to deliver next week. So that's the kind of value that the sponsorship has been bringing to us. I think the GFC event is important, not least because there are not that many events like this one in Turkey. And as a matter of fact, I mean, I don't think there's any event that is of that quality and that magnitude organized in Istanbul. So their GFC has probably called it a competitive advantage. But I think this is where we see most value, and I think this is why also that format worked pretty well, is that this was an empty space. It was difficult for bankers, treasurers, CFOs, investors to find a place to gather. Very often it was in London or other fancy places, New York, where it's probably tougher to make people travel. Whereas here you get very easily 600 people in the room with all the relevant key players, and I think this is what makes the difference.